You're looking at a chart of the New York Stock Exchange, which earlier today agreed to be bought by rival ICE. Chart today shows it up about 32%. Next, we're going to flip over to a chart of ICE, which is actually down off about 3%. Hello and welcome to the Markets Hub. I'm Jeff Rogo. Joining us first, right off the top, Steve Russolillo. This huge deal has transpired in exchanges. It's going to change the landscape of how we trade securities. NYSE, the venerable big board, is going to be purchased by really an upstart in futures and interest rate trading. How is the market reacting to this really landmark deal that we're seeing come through?
Yeah, you're right. I mean, it's a great point. It's a landmark deal, and you're seeing these stocks up. You're seeing NYSE Euronext getting a big bump here, although I would point out that the stock, even though it's up significantly today, is trading below the $33.12 price that this deal shows. So, showing that maybe perhaps regulatory concerns may come into play, as we've seen throughout the years with other exchange deals that have been killed because of antitrust issues and other regulatory concerns. So
even I mean, there's a similar deal to this a year ago or 18 months ago where ICE and NASDAQ tried to purchase the New York Stock Exchange. Regulators came in and said no. The deal fell on its face. I guess that's why you're seeing still a bit of a premium to the stock price, because people are worried about these the ability for this to actually go through.
Exactly. So that is always a concern whenever you talk about exchanges and mergers and whatnot. So that's one thing at play. Another thing is, if you look at a chart of NASDAQ, that stock is up today, perhaps on chatter that maybe this is going to be the first in sort of a domino effect of other deals that could play out. The thing with the exchanges business is that all these guys are trying to get bigger. They're trying to get bigger because the businesses that they're currently in right now, clearly they're suffering, and so the bigger that they get, hopefully they can expand into other opportunities, and that can sort of broaden their book of business. And so that is the key here with a lot of these companies, and that's why you could potentially see NASDAQ in the future as an acquisition target. But for now, though, obviously all the focus is on NYSE here and what's going to happen with this deal going forward.
All right, and then what's the floor? I mean, both of us in prior lives were exchange reporters. We used to have to go down to the floor. We would talk to people and say, what was the mood like? That was what told us how stocks were trading. What's the mood like on the floor after this deal that's really going to change everything that you know about how the floor operates? It was a standalone operation that defined capitalism for 200 years, was founded under a Manhattan buttonwood tree, and it's gone. I mean, what's the mood like on the floor?
Right. So talked to a couple of people about this, and the reaction is sort of mixed right now. One person said, this isn't our first rodeo. We've been through this before. Deals looked like they were going to go through and got killed. So we've sort of been bracing ourselves for this sort of instance to happen. And I think the key here is that, what's going to happen next? Is this deal going to change the floor? Is the floor going to still exist? I mean, ICE has said that they are going to maintain their stock trading business, and it's hard to imagine to think that the floor would just go away. So the question is, what's going to happen for these floor traders, and are their day-to-day activities going to change at all? And right now, it's still obviously very early in the game, and so it's still unclear as to what exactly will happen and won't happen. But I think the sense is that people have been bracing for this moment, that this isn't something that just came out of left field. And so I think right now that is sort of the wait and see approach. And yeah, it's it's a sad day also, in the sense that, of course, as you mentioned, this is a sort of the symbol of American capitalism for so long, and now to be taken over, it's sort of interesting. But at the same time, though, this is something that people have been expecting for a while now.
Well, then let's take a step back and let's think about the average investor, the average day trader who might use a TD Ameritrade account or even have his money with Fidelity, and they take care of his stock trading for him. So he looks at this deal, and what does it mean? Does it mean anything for him? Does it change the way that he should view stock trading, or is it one of those things that the changes have already happened? This is a reflection of the market that has become over the last 5 or 10 years.
Right. I think the latter point that you made is clearly what's happened here. And I don't know that there's really going to be a major difference in how the average investor views this sort of thing. I mean, I think the changes that have happened over the last 5 or 10 years, sort of the domino effect is now spilling over from that. So, the regular person out there who's just looking at their 401k and seeing, what it is, I don't think that anything is going to change for them based on this deal here. But in terms of, the nitty-gritty how stock trading operates and whatnot, this is a big day here for the exchange business.
But that nitty-gritty has come under fire. We saw the Senate look into it and call some of these exchange executives down to Washington earlier this week. We saw the night capital glitch earlier this year. We saw the flash crash in 2010. I mean, there is a sense of, from average investors, is this a market we can trust?
Exactly.
Will this impact that at all? Is there potentially to maybe improve technology, improve the trading mechanism so that glitches can over time be a thing of the past, or quite frankly, this doesn't impact what is a broader issue that's infecting people's ability to believe stock trading as an asset.
Right, and you hit the nail on the head. I mean, the trust or lack of trust in how trading operates right now is one of the main themes of 2012, really. And you saw it with the Facebook glitch, their IPO. You saw it with Knight Capital. You saw it with Bats. There were some big moments here throughout the year where trading glitches sort of roiled markets, and you saw those big events that really were major headline moving events, but there were so many other minor ones that really don't get as much attention though. And so you're right, the big question is, will this deal sort of be able to smooth out some trading? And I mean, again, the answer is time will tell and we will see, but one would think, especially with the regulators looking into this, that something needs to happen here to make these markets more efficient and sort of, make these glitches less and less. And so I think that's the key right now, and that's the key with this deal, and that's the key just with this industry heading forward.
Wonderful. Well, thank you so much. That was Steve Russolillo. Thanks so much for joining us.